And look, we've all been told the same financial advice since we were old enough to understand what a piggy bank was. Live within your means. A noble, bootstrap-pulling sentiment that suggests if you just skip enough lattes, you too can one day afford a slightly less depressing brand of cat food. But what if I told you that the entire rulebook the wealthy play by is not only different, but is, in fact, the exact opposite of what you've been told to do? That the secret to getting truly, titanically rich is to spend way, way more than you actually have. Yes, it sounds like the financial advice of a recently concussed lottery winner, but it is the gospel truth. For the ultra wealthy, living within your means is as quaint and outdated as thinking a flip phone is a piece of cutting-edge technology. Their strategy, it's a three-step dance called buy, borrow, die. And it is so effective, you might think it should be illegal. And here's how this magic trick works. First, you buy. You buy an asset that grows in value over time. It could be stocks, apartment buildings, a sports team, a cursed Fabergé egg, whatever. Inflation basically guarantees this growth in value of what you just bought. So let's say you're Warren Buffett and you buy billions in stocks through your company, Berkshire Hathaway. Now, do you sell those stocks to pay for your lifestyle, your private jets, or your next big investment? No. Selling is for suckers. Selling means you have to pay capital gains taxes. And paying taxes is something the rich doesn't like to do. Instead, you move to step 2. You borrow. You go to a bank and say, hello, Mr. Bank, look at my mountain of appreciating assets. Lend me a few $1,000,000 against it. And the bank, seeing your massive pile of wealth, happily gives you a loan at a low interest rate. And then that loan, it's not considered income. So you can spend millions of borrowed dollars tax-free to fund your life or buy even more appreciating assets, all while your original investment continues to grow and pay for your loan. It's like using your assets as a magical ATM, where you spend the same dollar multiple times for different things. And it gets worse. This brings us to the final ghoulish step. You die. Yes, the grand finale of this financial master plan is your own demise. Because when you die, your heirs inherit all those stocks and assets. And thanks to a loophole called the stepped up basis, the original cost of those assets is stepped up to their value on the day you die. All those decades of capital gains, poof, they're gone for tax purposes. Your kids can sell everything the next day and pay virtually zero tax on a lifetime of growth. It is the financial equivalent of you giving the IRS the middle finger beyond the grave. Now you might be thinking, well, that's great, Matt, but I don't own a railroad and my net worth is 3 gift cards and a half-eaten bag of Tostitos. Fair enough, but don't give up yet, because this logic, it trickles down in a way that you can play this game too. Take real estate. An investor making $50,000 a year can get a loan to buy a $300,000 rental property. They just spent now 6 times their annual income, way more than they make. But the bank's money is doing the work. The tenant is paying the mortgage, and the property value is going up. It's leveraging other people's money to build your own wealth. If you'd like to know where you can get properties that work like this, to make it easy, I uploaded some free information for you at frustratedinvestor.com. But this one guy in Canada turned a minimal investment into nearly $1 million in 7 years this way, proving that the strategy works even in a country that legally apologizes for everything. Or look at business owners. The tax code basically begs them to spend more than they make. Every dollar they spend on ordinary and necessary expenses like new equipment, marketing, a suspiciously fancy business lunch is a dollar that they can deduct from their taxable income. There's even something called the Augusta rule, where you can rent your own house to your own company for up to 14 days a year and pay zero income tax on that money. Zero. You can literally pay yourself with your own money and have the government reward you for it. It's an accountant's fantasy and a normal person's aneurysm. Even something as mundane as credit cards can be weaponized. Credit card churners apply for cards, spend just enough to get massive sign-up bonuses, often on business expenses, and then collect the rewards. One person documented making over $32,000 in cash bonuses and nearly 1 million reward points in a single year. They're playing a high-stakes game of financial bingo, and they're screaming bingo all the way to a free first-class flight to Fiji. I did something like this last year with the help of the people at loopholelending.com. They started me off with more than $100,000 at 0% interest, and then the game got really fun after that. But what's the point? The point is, the system is fundamentally designed to reward those who already have assets and know how to leverage them with debt. It champions spending on things that grow, investments, businesses, education, while punishing the average person whose biggest spend is just trying to stay alive. Like rent, food, healthcare. None of that is building your wealth. It's just costing you money. The wealthy aren't just spending more than they make, they're investing more than they make, using borrowed, tax-advantaged money to do it. So, what are you supposed to do? First, understand the difference between good debt, money borrowed at a lower rate to buy an asset that will grow in value, like a fixed-rate mortgage or a business loan, and bad debt, using a 29% APR credit card to buy a jet ski. Second, learn the basics of tax-advantaged investing. Real estate, it's the most tax-advantaged asset the average Joe has access to. Or like contributing to a 401k or an IRA. It's the kindergarten version of what the rich are doing. And this isn't just for the yacht and caviar crowd. This entire system has a starter pack, a gateway drug. It's a machine that you, a regular person, can actually use. Here, let me show you this. This is a brand new 3-bedroom, 2.5 bath house in Fayetteville, North Carolina. It's a perfectly normal house, but financially, it's a weapon. Following the script, you buy it for about 260 grand, but you don't pay that. You put down 25% or about $65,000. Then you borrow the other 75% from the bank. Now, just like the big boys, you get the appreciation on the entire value of the house, while only having to put up a fraction of the cost yourself. You took a small portion of your own assets to control a large portion of somebody else's. And while the house is appreciating, a tenant is paying you rent. You use that rent to pay the mortgage and expenses, and you're still projected to walk away with an extra $400 to $600 in monthly cash in your pocket. And get this, in this specific example, it's an interest-only loan. You are literally just paying for the bank's fee to use their money. And the whole scheme makes you cash positive on day one. It's an act of pure, unadulterated financial leverage. And then it gets so much worse, or better, depending on your tax bill, because this property was built this year in 2025. It qualifies for a beautiful piece of tax code sorcery that just came back into fashion called bonus depreciation. Now, you can't depreciate the land, but you can depreciate the building that sits on top of the land. And more importantly, you can depreciate all the stuff that makes it a building, like the carpets, the appliances, the cabinets, the fixtures. A specialist will then conduct what's called a cost segregation study, which is a fancy term for sending in a team of forensic accountants to figure out how much the toilets are worth. And if you don't know one, let me know, I'll introduce you. And thanks to bonus depreciation being back, you can take a massive chunk of those costs and deduct them from your income in the very first year. I mean, for a property like this, that could be a deduction of $50,000 or more. And then when you add it all up, you're looking at a 30 to 40% ROI in your first year. But get this, it creates a giant loss on paper. So you can march up to the IRS and say, yes, I know this property made me positive cash flow every single month, and it appreciated in value. But according to this accounting voodoo, it was a financial catastrophe. So please, don't tax my day job's income. I need that money. And the IRS will say, the voodoo looks sound to us. You're good. Carry on. And they approve it. They give it their blessing. And as if that weren't enough, the financial chef's kiss is this. By owning this one single family rental property, the IRS now considers you a business owner. Now you can start deducting all the other ordinary and necessary expenses that come with your new real estate empire. It is a step-by-step instruction manual for legally paying less tax, all while owning an asset that someone else is paying for, that is growing in value, and that is also putting cash in your pocket. It's enough to make you feel, well, a little bit frustrated with the way that you've been doing things. It's almost like there should be a place for people who've just learned how rigged the system is in favor of investors. A home for the newly enlightened and agitated. You might even call them a frustrated investor. For more information on this property and others just like it, download that free information that I mentioned earlier at frustratedinvestor.com. You see, I don't promote investing in real estate because I love real estate. I promote it because it's the one asset class available to the average person that checks all the boxes in the billionaire's playbook that made them a billionaire. And I'll walk you through it step by step in this video right here. I mean, understand it all or not. If you simply borrow money to buy income property, you're automatically in the game. If you don't, you're not. And if you don't know how or don't have the time, we can do it for you. You can be the boss. You can call the shots. We'll do all the heavy lifting. Check it out. I explain it all right here. Thanks for watching. Take care.